Good morning, good afternoon, or good evening, depending where you are on the planet, and welcome to the Tuesday, the 5th of March, Bull versus Bear webinar. Steve Miley here on the Call for Trade. Welcome, everyone. We're going to go through our usual regular run through in here today. We're going to take a look at the calendar, what we've had, what we've got coming up. We'll take a look at some articles from the major news wires, looking at the major geopolitical, fundamental, macroeconomic data, central bank driven events that are influencing financial markets right here, right now. And then we'll zoom in onto the charts to see specifically how all of those events are impacting the charts and how things are moving right now and where the potential opportunities lie. I'm starting off, so just below where you're watching this streaming in here now. Hello, Stefano. Morning. Or good morning, good afternoon, or good evening, depending where you are. I'm going to guess, Stefano, you're in Europe, probably Italy, right? And so, where are you, Stefano? Pop in the chat. But you always say hello, and I never say hello back. So there's your big hello, Stefano, right? So I know one of our regular viewers here. So yeah, we're going to go through and look at what's been happening overnight this morning. We'll zoom in on the charts, specifically looking at the stock indices, which most of you guys are trading. You are in Italy. Whereabouts in Italy, Stefano? So I will kick off in here by looking at just below where you're watching right now. You've got the live scoop news on the three columns. You've got the technical analysis column, the fundamental reports from trade day, and then you've got the news briefings from Live School. So here we are. This is what's been going overnight in here. So we're looking at, there's a lot of stuff in here about the UK budget, which is coming up on Wednesday. We'll have a little bit more of a look at that in tomorrow's webinar. We had the PMI data out of Asia and Europe this morning. So we will be taking a look at that as we go through. Generally, most of that has been coming better than expected. The European data and the and mixed on the China. So we've got some news out of China as well, and we'll be taking a look at that, setting their goals for 2024 and looking at policy support. So they're covering that there and here. So China sets GDP goals that needs policy support from all fronts. So there. Stefano. Well, Steve, Stefano, right? In Rome. Okay, I've been to Rome. Lovely Rome. Stefano, not Stefano. Okay, I'll get it one day. So we'll look at all of this stuff. I mean, a lot of this is covered, but do start using that resource. I think it's a really good resource if you're in Europe, like Stefano is. Okay, do check out the European briefing. There's a European briefing, so if you get up there, you can see what's happened pretty much on the Asian session, right? So obviously the briefings, are for the individual. They're not necessary. So the US briefing is for the US Open, so it's covering. You see most of the European stuff. The European briefing is going to cover the overnight stuff that's happened since the US closed on the Asia section. So etc. etc. Okay, so here we are. We'll run through some of this as we go through. If we do look at the calendar in here, I'm just going to jump back to yesterday first of all, because at the bottom of yesterday, you can see the China PMI. So you see the China PMI just missing in here, but we did get these other data and predictions coming out of China as well, which are fairly upbeat in here overall, but maybe not as bullish as the market would have quite liked in here. And if we look at the data for this morning out of Europe, you can see most of this in green. So from France, Germany, and the Eurozone as a whole, most of this PMI data. So it's PMI, PMI service sector data today, and we're getting from HCOB/S&P Global. We're getting the HCOB S&P Global data for Europe, for the services and composite data. See most of it beating in here for the Eurozone, France, Germany, and the Eurozone as a whole. If we look at for the UK, you can see a miss, but it's only a very slight miss on the UK data. Moving forward in here, going into this today, for if you're in the US, this afternoon if you're in Europe, we have durable goods data at 10 o'clock. Before that, sorry, actually, we have the S&P Global Composite and Services and Composite data. Okay, so this gets kind of trumped though by the ISM data, which is seen as more important than the S&P Global data when we get the them coming out together. So we get the S&P Global data at 9:45 Eastern Time, and then we get the ISM data, non-manufacturing data, at 10 o'clock. Also get durable goods data at the same time then as well. So we'll certainly be looking at those. We also get Fed speakers, and we had Bostic was on the wires yesterday, so we'll be talking about that shortly. But today we get Fed Vice Chair for Supervision, Barr, is speaking today at 12 o'clock and 3:30 Eastern Time. So watching out for those Fed speakers. Let's move on to 5 things to start your day. So first of all, our market's looking a little bit frothy, overdone, potential bubbly. Bitcoin's zooming up to 60,000. Obviously, all-time highs being made in the Japanese Nikkei, highest level for decades for the Nikkei since the 80s, 90s, certainly since the 90s. And then on the S&P and Nasdaq, the Nasdaq joining the S&P and Dow, making new all-time highs last week. So some talk about in here, maybe markets looking to see a bit of a pullback, not necessarily bubbles in here, but maybe looking for markets to do some kind of corrective activity, and we've certainly seen that in here this morning, and yesterday, and overnight in here we're seeing some dipping lower in here. So there's a lot of talking here about bubbles. Apple not doing too great on the overnights in here, with some smaller slice of the China's smartphone market being beaten by Huawei in here, so getting a larger slice and Apple doing less. So we've got a load of this extra data out of China in here. The Beijing's economic goals for this year look more ambitious than 2023, but still maybe less than markets are kind of expected in here, and it's going to need a lot of further efforts in here on policy to, fiscal policy and monetary policy to hit those targets. So kind of mixed messaging there coming out of China on top of that PMI data. Powell in here, as we know, is due to speak on Wednesday, Thursday to Congress in front of the Senate and the House of Representatives. In here, we spoke a bit about that yesterday already, and that's coming up tomorrow. We'll speak a bit about that tomorrow. But the expectation is of him to keep to push back and maintain this more hawkish stance. Bostic is more, if we go, remember you've got the Hawk Dove sheet. I do suggest you in here the trade day Hawk Dove sheet, and I would suggest that you bookmark this. So I'm going to put this back into the chat. If you go take a look at the Hawk Dove sheet at tradeday.com, in here you see Bostic is more in the middle, right in the middle in here. If anything, I would say Bostic is more slightly more on the dovish side than the hawkish side. And Bostic on the wires yesterday in here, saying that he's penciled in the first rate cut for the third quarter. Now, remember, markets have backed off from expecting it in March and May, and now more likely looking like June, but still the second quarter. He's saying more likely the third quarter, and then also to be followed by a pause in here. I think I've already opened this one up. I'm going to open it up again just in case. So, that's kind of not as, and given Bostic's not particularly hawkish, right? He's more to the center or more on the dovish side. That's certainly pushing back even further than what the market is anticipating. And then just looking at what we've got coming up today, as we know in here, we said it's ISM in here, services index. Oh, I forgot to mention this in the we do have Super Tuesday with the primaries in here coming up today. So North Carolina, California, Texas, and Oklahoma among the dozen states holding the primaries in here. So maybe getting more of an indication of what's to come in the US election as we go forward into the year. So that could have a slight impact on the market, but probably not much of it unless we get some kind of real surprise. At the moment, all expectation that it's going to be another Trump versus Biden shootout. So let me move on to some of the individual articles. We'll skip through these quite quick. So Bostic sees Fed pausing after just one rate cut in third quarter. We've already covered that. There's Raphael Bostic there. let me come back to that in here. I'm going to just move that tab further back in here. So what else do I have for you? Yeah, I think there's already got this in here. This is so Fed's power to double down on no rate rush to cut. So on following on the back of that. Remember, we do get the ECB and the Bank of Canada later this week on Wednesday and Thursday, respectively. Bank of Canada first, and then the ECB on Thursday. What else do I have already covered? Bostic in here. JP Morgan. So there's that article on the frothiness of markets, but Goldman pushing back against that, saying that the rally is justified. There's the news on Apple. Woes in China's even 24% sales plunge of iPhones in China. Overnight in here, we're seeing mega caps dipping. Apple particularly dropping, and the futures are lower in here this morning, being led lower by the Nasdaq. Nvidia was a notable loser yesterday. I think it was Nvidia yesterday, and that kind of weighed a little bit on the whole tech sector. Overnight in here, European shares, because of this lackluster Chinese stimulus. So that's so kind of mixed messaging. Even though they were in some ways a little bit more upbeat, they were also, it was this kind of disappointed the market in here. So and then plus with the Apple pulling lower in here, despite the fact that the European data, the PMI data we looked at, beat expectations, we're seeing European markets lower. Lost your screen share. Let me see if I can get that back. Where are we? You can still hear me though, guys, right? I'm just running through the articles a moment. Let me see if I can re-engage that in here. For some reason that dropped. There you go. It's back. I got it back. Okay, guys. So you didn't really miss it. I was just running through the articles, really. I'll just do a little back recap, but basically running Apple iPhone woes. So Apple and iPhone, 24% down. Futures retreat as mega caps slide in here. So just running through these articles. Really, you haven't seen anything. There's nothing really in the imagery. Just all these headlines from Bloomberg and Reuters. I was running through, so you heard all of that anyway. And then, as we've already covered that already, Fed Powell double down, no rush to cut. And then Bostic, we've already covered that one as well. Again, from Reuters on Bostic, no urgency to cut interest rates. And then again from China service activity growth momentum softens in Feb. So that was the PMI data. So on the China side, both the PMI data and that forward guidance for 2024, slightly disappointing markets. Wall Street hit by tech slide, hawkish Fed speak. So the hawkish Fed speak was Bostic in here, and then Apple down, as we said in here, and China hurdles so all of these stocks, because of the concerns around potential slowdown in China, in here hitting not only Apple, but then we've got AMD and Tesla as well lower. And then further here on China, okay, we've already covered that one already. So generally speaking, on the overnight, the main focus in here, Bostic was more hawkish than expected yesterday. Apple guidance or Apple results in China disappointing. China's data in here on the PMI slightly disappointing, plus their forward guidance for 2024 is going to need a lot of stimulus, and also it was kind of mixed and the market hasn't taken that particularly well, so that's kind of negative. So all of this kind of weighing on stocks which were already dipping lower yesterday anyway off of new highs, weighing on stocks going into this morning. What else do I have for you in here? What's going on in yields? Well, yields continue to push lower, so yields in here, this should be a positive for stocks, but not if obviously we've got a broader data that's negative. But if we do get a significant break, I think we need to be watching this kind of initially 418 and then like the 414 level on the downside in yields. If we can break down through there on the 10-year on yields, and so that putting higher prices, lower yields, it could help stocks. But I mean, obviously, if the tech sector is getting beat up a little bit in here because of that guidance we've already spoken about, particularly stuff coming through from Apple, Nvidia rolling over yesterday, not for any particular reason, then we might see a bit more of a negative day today. But then equally, we are keeping our eyes on the data as well. So we have those releases at 9:45 and 10 o'clock Eastern, with the main focus on the 10 o'clock data. On the overnights, you can see a big move lower in here. So a big move lower here on the Hang Seng, 2.6% in here, and that was on the back of that. So obviously that's pulling us down from the China news in here. European bourses also actually holding in relatively well, given how much Asia's down. So we're pretty much unchanged for the European exchanges. And if we go and take a look on the overnights, though, notably lower, particularly on the Nasdaq, about 0.5% lower on the Nasdaq, 0.25% lower on the S&P. Question from Stefan Asher: why do we always read this special markets wrap? So markets, is just markets wrap. It's just a wrap up. So it's like a quick summary. Yeah. So that's all it is. Market summary. Yeah. So basically, what's happened on the headlines. That's all that means, Stefano. Okay. What else have I got for you? So yeah, on my reports in here, you can see we are more bullish. We have been breaking to the upside on the bond. So across the yield curve in here, so 30s, 10s, 5s, and 2s, all looking more bullish. We did get a bit of a setback in here in 2s, but still for me pointing up higher in price, which is lower in yields, which should be supportive of stocks. And stocks, despite this dip lower we had into the close yesterday and this morning, I think it's still a buy opportunity. So we have dipped lower in here. Going into the close yesterday was still fairly resilient. It kind of had a slight dip off the highs on stocks. Obviously, gold tore to the upside both on Friday and again yesterday in here. And there's like a massive move in here. But nevertheless, we're staying bullish in here. But, you have to be a little bit careful of this because, it could easily dip back lower. And crude in here retraced back lower, but underlying threat still bullish for crude. So still carrying in a more bullish bias in here. So we have had that sort of, we had the push higher yesterday and then a dip into the close and this ground lower in here overnight. For me, this still looks fairly bullish in here. We've got kind of two, this is on the S&P, by the way, on the 30-minute chart. If we go and take a look at the longer term, or not longer term, but then where are we? So there you go. Look, we've come right down to this trend line. So this is the NVIDIA rally. This was the NVIDIA rally after the results last week, right? So this is the impulsive move we saw from NVIDIA in here back, actually, 2 weeks ago, right? On the 22nd, it was 2 weeks ago, not last week. 2 weeks ago, we saw this impulsive rally driven but really mostly by NVIDIA in here. And so that's the low in here back from the 21st, actually. And then it's through the more recent low in here from the 29th, and you can see we've gone right down towards that and then bounce back off of it in here, and we're holding just above it. So whilst above the overnight low in here, which I have as 51.17 3/4, then we're still bullish. If we start to break down through there, it gets a little bit worrying. A good easy target and move down towards here like 50.88 kind of area. So just watching out for that. But I think it's going to be the next move really driven by the data, which we have obviously in a couple of hours time. If we go and take a look at the Nasdaq, it's a similar story in here. Let me get rid of all these drawing tools. Remove. So here's that that spike higher in here from, there's the one from 29th actually. Let me go back here. I've got the NVIDIA rally in here. Oops. From here. Okay, so if we go and take a look on this one, hopefully take a look. I'll get there in a second. Apologies. See, I do all my analysis mostly on there we go. So you can see on the same trend line in here for the Nasdaq in here, we're holding, actually just move that slightly up. There we go. We're holding notably and bouncing from above that. So whilst below the overnight low, the overnight low in here, 107.25, the trend line is just pretty much right around there as well. So below 18 like 90 would be a bit of a concern in here, and then quickly aiming at that low there, which is 18.029.5. So those are kind of the important levels for me on the downside. If you break down for them, we could see a deeper correction, but whilst above there, I'm carrying a bullish view still into today. So bullish still until we break it down through these trend line supports potentially, which are holding at the moment, which come up from the lows from the 21st and 29th. If you want to go draw those on your charts, just double check those. Yeah, the lows from 21st and the 29th. So I'm drawing those trend lines. Whilst we're above those, bullish. If it starts to take those out, probably flips a little bit bearish on the day. Probably not going to get that signal until after maybe the 9:45 S&P Global PMI data, but more likely the ISM. I'd rather wait for the ISM data at 10 o'clock Eastern. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Take care, stay safe, and I'll be back with you with another bull versus bear webinar tomorrow. Bye.